Hi everyone, welcome to Full Circle Trader. I hope everyone is making money and learning from these videos. This analysis video is going to be very interesting because in this video, I'm going to show you something really interesting on the 5-minute chart. So please watch the complete video. Let's get started. So this is the Nifty daily chart. And as you can see, we have the minus wide range bar igniting here. And this bar is initiated the move to the downside. There are a couple of important points related to this bar. It has broken this past support, which was a very crucial support at 16,800, and which means that this wide range bar has initiated a move, and probably in the coming sessions we will see more downside movement. Now today's session is especially interesting because it open gapped up and it tried to move back up and crossed more than 50% of this wide range igniting bar. However, the selling has increased. This bar has came back down eventually and closed at its low, but above this wide range igniting bar. So that makes this bar an inside day bar. So that makes it very interesting because usually when you have an igniting bar and then you have inside day, that potentially shows you that in the coming sessions, prices might move in that direction. Now, this two bars together makes a potential minus 1, 2, 3 pattern, which is a bearish continuation pattern. This pattern tells us that in the coming session, prices might move further down from here. If we can see, all the averages are almost aligned. And if we have more downside movement, then most probably this declining 20 MA will also breach and come down below the 50 MA. Now, why am I saying that this would form a potential minus 1, 2, 3 continuation pattern? Because if you can see, this bar has its open and closes, at the lower 1/3 of this entire wide range bar. So this is the bigger bar, this is a smaller bar, and this smaller bar remain at the lower 1/3 of this igniting bar. So that is a very potential sign to the downside movement, which might come in the coming days. Another very important point to note here is that both these bars has closing below the support. So which means that sellers are very aggressive and they have taken over this battle from the buyers, and which is why now we have closing below this 16,800 support, and this indicates further downside movement from here. Now, as you can see in the 60-minute time frame, prices are still declining and they are making very beautiful lower low and lower high pattern, which means that this time frame, this intraday time frame is in a downtrend, and we might see more downside movement from here. Another interesting point, which might most of the traders have not noticed, that this bar has completed its measured move to the downside, right? So this was the first leg of the move, then it formed the consolidation, and this is the second move to the downside, and which is the reason that today prices open gapped up, because this pattern has completed its full course. Now, as I mentioned in the beginning, that I'm going to show you something very interesting on the 5-minute chart. So let's head to the 5-minute time frame and see what I was talking about. So let me just enlarge this chart here. The first point that I wanted to show you all is that prices open here and it moved above. Now I'm sure that you will ask me that what is so special about this price action. So there are two things to notice here. First, prices open above the declining 20 MA, and then not only it gapped up above declining 20 MA, it also crosses above the 50 MA, and then it came back down. Now most of the people treat moving averages as dynamic support and resistance area. I have created a full video on trend analysis on which I have spoken about the moving averages. If you haven't seen that video, I'll give it the link above. Please go ahead and watch that video. Now, as I mentioned, these moving averages are nothing but just indicators which follow the prices. No doubt that they help in speeding up the analysis, but they do not act as the support and resistance. Only price action or the price is something which tells us the real support and resistance for that matter. But yes, I will admit that 200 moving average is a moving average which is powerful because it is widely followed. And when so many people follow the same moving average, it will definitely show its power when prices reach to it. So apart from that, as we can see, prices have breached 20 MA, 50 MA. So that means that when prices are above the 50 MA, which is also a good powerful moving average, then why prices have came back down and why not, they have kept on rising from here. So to find out the answer, I will take you back to the 60-minute time frame, and I will show you that why prices have, after rising here, they have started to decline from here. So just for a second, let's move back to the multiple time frame chart. Okay, so this is the 60-minute time frame, and as you can see that prices have reversed from here, and this is the area where prices took the downside movement. Now, why they have taken the downside movement? Because we have the minor resistance in the 60-minute time frame. So prices opened, gapped up right at the resistance area, and that is why they were not able to sustain, and they came back immediately. Now let's just again go back to the 5-minute time frame. So this was the first thing that I wanted to share, that moving averages are just subjective tools. They are just subjective indicators. Please do not depend on it. Follow the price, learn how to read the price action and candlestick patterns. That will gonna change your trading in a big way. Trust me and take my words for that. Now, the second important point that I wanted to share in the 5-minute time frame is the trade that we could have taken if you know how to read the price action. So in the 5-minute time frame, after all this wiggling around by the prices, this candle, if you can see here, is the best candle to go short, and where you can have gone short below this candle. Now let me just clean this up. Okay, so now if you ask me why this candle, see, all the moving averages are crisscrossing, so that shows that there is no clear direction. But see what has happened in the day. Prices opened, gapped up, it came back down, and then it again moved back up. Then we have the second head of, or the second shoulder of this pattern. So it has formed a kind of small or a mini M-top pattern. And if you can see, this second shoulder is below the first shoulder here, and from where prices have moved back down, and it retested this support, which it has breached here. Now prices, when they came back to this support, again have come back up, because maybe buyers have stepped up in a hope that prices will move back up. But that did not happen, and supply again got increased, and prices have breached the support again. Now, after breaching it, this was the moment that I or any other informed trader will wait, because we cannot short the market on the support when prices are on the support. So we have to patiently wait when a right setup, a right candlestick pattern forms at the right location. So prices have retested this support level here. It came back down here, and it breached it. Then this rejection bar has formed, and it is a powerful bar, and we could have gone short below this bar, and then it is almost 100 odd points that we could have taken in an intraday. So this was the special thing that I wanted to share in this analysis with you all. Now if you have gone short below this candle here, you could have placed your stop here, or maybe above here, just to give it some more room. Now let's just go back to the main chart. Okay, so for tomorrow we will go short again in this market only when prices will break below this wide range igniting bar, right? So if prices will as and when it will break below this wide range bar, we will go short or buy puts at the appropriate strong bearish pattern, right? And let's say if prices remain in the range, or if we have again an inside day, then we will probably not trade, because on the upside we do not have any void or free space for prices to move up. But on the downside, we have sufficient room, very free space where prices can very smoothly move down. So our bias for tomorrow is to the downside, but prices should break below this wide range bar. Now let's just quickly clean this up all, and let's just move on to the Banknifty chart. So as you can see in the Banknifty chart, everything looks same, and we have the bearish bias in the Banknifty as well. The only difference in this chart is that 35,000 is still intact as a very strong support area. And for us to go short in this market, we want prices to break below this support area. We will not go short if prices will open and remain above, on this support area. We have sufficient room in the 5-minute time frame. Let me just show you. Yes, so we have sufficient room to the downside, but only point is that prices should move down. We have all the averages aligned in the daily 60-minute, 15-minute, as well as in the 5-minute time frame. But 35,000 support area should get broken tomorrow, and we will definitely go short in this market at the appropriate pattern and strong pattern. So with that, let's just call it a wrap. Hope you have liked this analysis. Please give it a thumbs up. Please subscribe the channel and kindly share this video with your friends. So till then, take a very good care of yourself, your parents, save water, and catch you soon in the next session. Take care. Good night.